Next is exit strategy, and this is so important but often missed when it comes to considering a potential property. And what we see is many investors and property buyers get really caught up in terms of the short-term benefits of that property, and they look at maybe rental yields, they look at tenant profiles, they look at area, and that's absolutely critical. It's very important to consider all of those, but then they usually stop at that point. They find a property, go headstrong into it, and then forget about the future, let's say, of that property. And exit is so important because whether you intend to sell the property or not, there will come a time that you may want to do something with that property, and that could be passing it down to a family member, that could be selling that property and releasing any value in that potential property, or it could be even selling a whole portfolio if you grow to that size and you want to sell or exit a portfolio. And considering who the future buyer might be of that property is critical to understanding what your exit strategy might be. And one of the things that we tend to favor with any property that we're looking at is ideally multiple exit strategies. So what are the ways that you could potentially sell that property? And buy-to-let is fantastic for that, because a buy-to-let property that's a mainstream residential house or apartment that could rent for individual tenants, couples or families, fantastic. But also if you could sell it to investors or you could sell it to homeowners, that's great. It gives you a little bit more exit options when the time comes if you do want to sell. If you're buying a property that's only resale to investors, you're a little bit more limited on the exit options. So trying to prioritize properties that have strong rental yield, which is what majority of investors tend to favor, will give you a little bit of a head start on any potential exit to an investor in the future. So having properties maybe like student buy-to-lets, where they are very much focused on increasing kind of rental yields, they tend to have a secondary market of investors that is more favorable because that rental income is slightly stronger in that marketplace. But you still have limitations. You still can't sell it to a homeowner. So it's important to kind of consider these exit routes when it comes to your potential buy-to-let, and not go kind of headstrong or favoring a property that looks great at the beginning but maybe doesn't have an exit plan for you in the future.